and welcome to Money Matters. My name is Jim Butler with Videre Wealth Management, and my co-host tonight is Dave DeWitt of DeWitt Capital Management. Hi, David.
Good to see you again.
Good to see you. Well, we're in an interesting period. I think we always say that, but one of the exciting things about our business is there's never a dull moment, and if you think it is, just turn on the TV and listen to the media. Isn't that right?
Pretty much.
So as we wind down last year and look forward to a new year, what are you finding the mood of a lot of your clients and investors in general?
Well, people have mixed feelings. You know, it's hard. Some people are optimistic. Some people are pessimistic. Some people are looking at the short term. Some people are looking at the long term. So, you know, I think depending on your time horizon, yeah, that could change, you know, what you're thinking. How about with you?
Well, I mean, you put it very well. And if you have a longer term time horizon, what I have found is those conversations are a little bit easier because people are willing to focus on long term and less on the short term and current events. Certainly we always have current events such as the presidential election cycle. Even though we don't want to date ourselves with this show, certainly that's in front of us in the months ahead.
Yeah, generally speaking, the markets are generally up before the presidential elections and down the year after. That's because the campaigning and the incumbent has to try to make people feel really good about what's going on. At least that's the theory.
And those that are not incumbents, in other words, those the wannabes, they're trying to tell us all the pains that we're supposed to be feeling,
right?
And why they're there, and they're going to fix it.
Yeah, I think wasn't there a former president who said, "I feel your pain," going back a few years?
It sounds familiar.
I don't know if he was president or campaigning then. I can't remember.
Sounds like a campaign promise. The conversations I find interesting, a little more challenging, but nonetheless interesting, are those where they tend to be more short-term oriented, and they do get swayed by the headlines in the media. And consequently, what I find has happened in many of those cases is they've lost the long-term perspective with regards to how we're always able to come through the difficult periods and things continue to grow. From the economy to the market, U.S. and international. We always seem to come through difficult periods in a stronger place.
I agree. That's normally what happens. I mean, the market generally tends to go up over time.
And, you know, just to use a term that all of us can identify, if we look at the, the radical Islamic situation that we're faced with, that's certainly not a problem that's going to get fixed anytime soon. But it certainly appears investors are concerned to the point where they say, this time it's different. And the future is going to be much different than it was when they were growing up, and they hate to be passing this on to their children and grandchildren.
Yeah, I can tell you, certainly in the area where I invest, which is in master limited partnerships and energy infrastructure, oil prices are down. They came down over the last year. Generally speaking, they're lower than they were a year ago, and hence a lot of investments that are related to oil have come down. And the longer term you think about it, oil is a cyclical thing. It goes down, it goes up. So you would think that if it's down, maybe people would be buying. So, generally speaking, over time, we've seen that happen.
I think the market that we're in today, with the energy sector really being down more than up, that is an opportunity for the long-term investor.
Yes. Just got to think out a couple of years even, as far as that's concerned.
Well, along those same lines, having done some research recently, I went back to our recent downturns, and the downturns being the more severe ones. The definition of a bear market is for an index like the S&P 500 to drop by 20% or more.
Right.
And over the past 70 years, since the mid 1940s, we have had 13 bear markets. Pretty tough times.
Yeah.
That includes about a 46% downturn, David, in 2008,
Yeah.
and then a 49% downturn in that 2002 burst into the tech bubble.
Right.
Very
Pretty
difficult.
brutal periods for people to get through.
They absolutely are. So on average, if you look at that time frame, we've had a downturn about every 5 to 6 years, on average of about 30%. But what happens every time? We always come through. Then there's always a recovery. And consequently, if you look at the long-term average returns of the S&P 500, they tend to hover around 10%. Sometimes it's 9, sometimes it's 11. And I'm not saying 2 years, 3 years. You can do that. If we look at the S&P over the past 3 years, it's between 15 to 20. But if we look at 5, 10, 15 years, it comes back to right around that 10% number, even including those bear markets with those significant downturns.
Those downturns is what turns our hair gray, though.
They are, but what's also interesting is, and this is a study that's put out by JP Morgan, and they update it on a regular basis, and that is the S&P will have a positive return in those time frames, but the average investor is around 2.5%.
Right. I think the average investor has a tendency, and it's just human nature, when things are looking bad and things are looking down, to start to build a world around this whole happening that it's going to stay this way forever, and there's no recovery. So that's when they sell. And then as things are recovering and they're reaching a high, they think it's safe to get back in, and then maybe we're about ready to go back down again. So what you're saying is correct. You know, you've got to keep the long-term perspective, and you buy when there's blood on the streets and when it looks horrible.
It's not easy to do, but that
No.
I think is where we earn our stripes and earn our credibility, is by helping clients to maintain long-term focus.
I have to beat them sometimes.
Shall we move to a question?
Let's go to a question.
So we have Thomas Jeffries of Villanova who's written in, and he is asking, what are some tax-efficient investments?
Well, that's a very good question. Two ways of getting tax efficiency. One is to invest in a tax-deferred IRA, Roth IRA, annuity, something that defers taxes into the future. Other ways are to invest in municipal bonds that are federally tax-free. If they're in your state, they're federal and state tax-free. You can invest in master limited partnerships where you get tax-deferred income. You have to pay the tax when you sell it, but you can defer it for quite a long time. Those would be the ones that come to mind. How about
any strategies, any particular strategies? If a client has a portfolio of either the master limited partnerships or individual stocks, and it's in a taxable account, are there any strategies that they can follow to minimize taxes?
Well, one way would be to, if you have a loss and you have gains in the year, you could sell your stocks at a loss and swap into a different stock. So that will offset the gains that you have. So yeah, I mean, tax loss selling is certainly one of the strategies.
And how much can they write off on capital losses per year?
Well, I mean, if all you have is losses, the maximum loss you can take is, I think, $3,000.
Right.
But if you had a $100,000 gain and you had a $100,000 loss, it would make a lot of sense to sell the loss and then invest in something else. Then you wouldn't have to pay taxes on that gain.
Right. Right. So you could offset the two.
Yeah.
Right.
I think it's a strategy that a lot of people employ.
You know, and what's also interesting, David, is I think you can employ that throughout the year. You don't have to wait till the end of the year.
Right.
Sometimes it is more convenient to do that,
Right.
and it certainly can be appropriate to see what unfolds during the year.
Right.
But if it makes sense to do that in the first or second quarters, there's no reason not to do that in a taxable year.
Except by the end of the year, you have a better handle on where you stand, and a lot of people will wait for that reason. And some people just wait because they procrastinate, which is probably the majority of people. And but yes, tax loss selling is a great way to offset taxes.
Good answer. Thank you. And if you have a question, you can write in to let us know what that is, and here's how you learn about that.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Our guest tonight is Randi Taxin of United Retirement Advisors Group. Welcome, Randi.
Thank you very
Hey, Randi.
much. Nice to see you.
Good to see you.
Nice to see you again.
Good to see you.
It's funny, we're just talking about taxes, and now we have a guest with the last name Taxin.
Very appropriate. I think we're somewhere in the tax season.
Yeah, that's right.
Almost. Yep.
So there's a few different topics that we can talk about, but why don't we start out talking about Medicare? Certainly, that falls under the umbrella of our whole healthcare system, and as we all get older and closer to the qualifying age to receive Medicare benefits, why don't we start out by asking, what involvement do you have in helping clients in understanding their options with Medicare?
I've been teaching around the area for the past 15 years during the Medicare selling season, the difference between the Medicare plans we have in the country. The Medicare system is not a bad system. It's very much like what we call the Obamacare or the Affordable Care Act now, where we've got a Medicare Advantage world and we have a Medicare Supplemental world. The Advantage world is governed by Medicare. You're allowed to, in Pennsylvania, we're allowed to sell, 10 different companies are allowed to sell their supplemental plans. They're private insurance companies like AARP and Aetna and New Era and many different private ones, but they all use the same chart. You can buy letters from A to N. Depending upon what services you want and what things you want covered, you can choose between A and N. Nobody buys just A and B, doesn't cover anything. You're basically choosing from C to N. Every company that sells these supplemental plans have the same exact benefits. So if you have a sister in California and she has an F plan, she has the same coverage you do, it just might be with a different carrier and a different price. The prices go according to age, whether you're a male or female, whether you smoke or not, and the zip code that you live in. So it becomes easy to sell it. Depending upon where you live, this is what the prices are going to be. Usually we can put your age, your zip code, and all that information into the computer, and the least expensive plan in your area pops up. Go with that one. It doesn't matter if Aetna gets out of the Medicare supplemental business. Medicare will give you 3 months to find another plan. So you don't have to worry about who the company is, how long they've been in the business. And some of them do go in and out of Medicare, but they've got this provision that allows you to switch from one to the other if the company is going out of business. That is a very comprehensive coverage, the supplemental plans. You have to buy a standalone prescription drug plan on your own. So you have your supplemental plan plus your prescription drug plan. And somewhere when you first retire, turn 65 or go on to Medicare, somewhere between $180 to $200 for the supplemental plan for your doctors and the prescription drug plan. There's also a Medicare Advantage world out there, which are the big companies, the names like Keystone 65, which is Blue Cross, and Aetna, and we have Geisinger Gold, and there's many different ones. When you get to be about 65, you're going to get flooded with information, mostly from the Medicare Advantage plans. And believe it or not, our government is helping supplement our costs for these Medicare Advantage plans. They are generally HMOs and PPOs. So
what's an HMO?
An HMO is a network provider. A PPO is a preferred network, where if you're in an HMO, you have to stay within the provider network of that company. You go on, make sure that your primary care doctor is there, that the hospital you want to use is in that network, so that when you sign up for that plan, you know what you're getting into. The one thing that I do urge clients who come to me is, if they're going into an Advantage plan, is to check with their primary care doctor to make sure that they have room for more people going on a Medicare Advantage plan, because they can limit the amount of people that they take in their practice who are on Medicare Advantage. The reimbursement is not as good as the reimbursement from the supplemental plans.
So before you sign up for your Medicare supplemental plan, you would check to make sure that the insurance company that's providing this to you includes your doctor, that you can stay with your doctor?
The supplemental plans, the private companies, the doctors love you because they get paid from Medicare, and then they get an additional money from the supplemental plan. When you go on to the Medicare Advantage world, that encompasses your doctors and your prescription drugs, that's a different kind of a plan. So you no longer use your Medicare card, you only use this Advantage card. So they're getting paid, it's an HMO or a PPO, so the doctor's getting paid for every month that you're enrolled in the plan. So if you go to Dr. Smart, he's getting whatever his reimbursement is a month, $15, $30 a month for every month that you're in the plan.
No matter how often you go visit
No matter
the doctor.
how often you go visit the doctor. So that's the way the HMO world lives. So
That's
they
HMO.
might limit the amount of Medicare Advantage patients that they can have in the practice.
Okay, so go ahead.
Randy, how does somebody decide which avenue to pursue? It sounds like Avenue A, the more common one, is the traditional Medicare. A, B, if they want the supplemental piece, and then the prescription drug coverage. My guess is there are probably more people in that, or Plan B, which would be the Medicare Advantage route. How does
Very
somebody
good
know?
question, and it's really important for you to know the difference between the plans. I would probably tell you that people who are uninformed are going to go into the Advantage world because the premiums are lower. We have in our area premiums for some of these insurance companies that are $0 a month. So they're actually paying nothing a month
How
to
do they
be
do
in
that?
the plan, but if they get caught being in the hospital a few times, they could be out up to $6,700 a year. So because our government is helping pay for the people in the Medicare Advantage plan. Medicare Advantage plans might be $78 a month, might be $140 a month, so they're less expensive in a lot of cases than the Medicare Advantage plan and the Medicare supplemental plan. So if you don't do your homework, the Medicare Advantage plan looks good because it's cheap and it includes drugs. The only problem with that is that you don't always have freedom of choice because it is an HMO or a PPO, and it really is designed only for Pennsylvania.
So if you went to your doctor a lot, and your doctor knew that you went to him a lot, and he's only going to get $10 a month to have you be a patient, wouldn't the doctors hate that?
Could be. The goal of the HMO is to keep people healthy, to keep seniors healthy. The Medicare Advantage plans have Silver Slipper or Silver Sneaker, that's membership to gyms. They often have a nurse practitioner or a nurse who will call you on the phone and talk to you about your health history and say, keep track of you, call you once a month, help you with your diabetes and your diet and your nutrition, because their goal is to keep you healthy and out of the hospital.
So they're going to see. Are they going to ask you if you can eat your fruits and vegetables?
They might. And it's
Do you
up
need
to
that?
Probably.
and they do that, and they're wonderful like that, and a lot of times they help people. Their goal is to keep you out of the hospital and healthy.
Yeah.
And if they do
Nothing wrong with
that,
that.
then it kind of works well. If you snowbird or if you spend time in another area, you don't want to go into an Advantage plan. You want to have the freedom of choice to go with a supplemental plan, because the supplemental plan you can use in every state in the United States. It doesn't matter. The HMO, remember, that's a provider organization just based in your area. The PPO the same. So there's really should not be using that if you don't spend 12 months a year in Pennsylvania.
Well, what happens to the consumer who gets who buys an Advantage plan and happens to be on vacation, and whether they're in Florida or Arizona and they need medical attention?
Very good question. Under emergency situations, of course, in this country, they will get treated. They might delay an operation that's needed, if it's not life-threatening, to say you need to go back to your home state to have this surgery done. But in an emergency situation, that's not a problem. You'll get taken care of anywhere. They take care of people who don't have insurance. So
here's a loaded question.
sure.
So has the Affordable Care Act helped the Medicare world, or has it made it more complicated, or what?
It hasn't, to the average person like you or I, there really has not affected the Medicare world yet. What we do see are some changes as to what Medicare allows. See, in order to have your Medicare plan work, whether you're in an Advantage plan or you're in a supplemental plan, Medicare has to approve what they're doing in order for the supplement or the Advantage plan to pay. So there have been some changes as far as what Medicare is going to allow. So that has been as a result of the Affordable Care Act.
What does Medicare cover? What does Supplemental A cover and B? And then how do prescription drug plans work?
Very good question. So when you turn 65, even if you're still working, you are supposed to sign up for Medicare Part A. As long as you've worked 40 quarters in this country, you're entitled to Part A, and that's for free. Part A takes care of hospitalization. So even if you're still working, sign up for Part A. It's used somehow in some situations in the background, sign up for Part A. When you decide to retire, that's when you sign up for Medicare Part B. Right now, this year, Medicare Part B costs $121 instead of what has been $99 to $104 for several years. They've had a price increase. So when you go into Medicare Part B, you're paying $121 for this year, and that takes care of 80% of your doctor's visits. All of this stuff that goes on during the Medicare selling season is all about 20% of your overall cost, of your extra cost. Whether you cover it with a supplemental plan or you cover it with the Advantage plan, we're only talking about 20%. So when you sign up for Medicare Part B, you have to sign up for the prescription drug plan, which is Medicare Part D, like drugs. If you don't sign up for D when you sign up for B, and you have no other drug plan, and you need it 5 years from now, you're going to get penalized for every month since you signed up for B that you did not sign up for Part D. So it's really important to sign up for a standalone drug plan. If you take a supplemental plan, and if you take the Advantage plan, be careful. They have them with and without drugs. If you're not in TRICARE, or you're not getting your drugs from a former employer with a prescription drug plan that goes on for the rest of your life, you must have the Advantage plan that has the Part D with it.
You keep referring to enrollment period, and we have to be careful not to date this show because it does air at a different time than this conversation. But are there specific enrollment periods,
Yes.
Randy?
The Medicare enrollment period starts October 15th and ends December 7th. So that is the time period for you to change what you're in if you're in an Advantage plan. If you're in a company this year and you didn't quite like it and you might want to switch for next year, you have to do it between October 15th and December 7th, and your prescription drug plan the same. Now, when you first retire, if you decide to retire in July, that is a special circumstances or a special election period. You can sign up for Medicare Part then. But the average person who has been on Medicare and wants to make a change, they do it between October 15th and December 7th.
So the day you turn 65, is that the day you apply for Medicare?
You should 3 months before.
3 months before. So that's got nothing to do with that normal enrollment period that you're
Correct.
talking about. Okay.
The other thing I want to remind you is that when you first retire and you first go on to Medicare Part A and Part B, you have a free in. They're never going to ask you about health issues or anything else. This is the time for you to make sure that you go into the right plan. You can go into a supplemental plan, they won't ask you any questions. You can go into an Advantage plan, they don't ask you any questions. If you end up in an Advantage plan and you get health issues, and not just high blood pressure and cholesterol, but other health issues, the Medicare supplemental plans will not take you. So
Are you stuck?
you are stuck in an Advantage plan, is right.
So when you reach 65 and you choose your supplemental, but you don't choose your supplemental till after you retire.
Correct. When you don't choose that until you go off of your company's health plan.
I got it.
So
I
when
got
you retire and whenever that is, 67, 68, 70, you can do it as early as 65. That's the time to make the most important decision in your life. Do you want the Medicare supplemental world, or do you want the Medicare Advantage world? Know the difference between the two.
But Randy, if somebody is 65, they're working, their employer provides very good coverage, do they need to sign up for Medicare at that point?
No, they do not. They are supposed to sign up for Medicare Part A. That is free, and you're entitled to that at 65, but do not sign up for B until you need that coverage.
And then let's say that person retires at age 67 as an example. If they sign up at 67 for A and B at that time, that's okay.
That is okay as well, but make sure you sign up for D for drugs as well at the same time.
What if you're not on a company plan? You just pay for your own.
It's a lot less expensive to be on Medicare than it is to be on an individual health plan at age 65 or 66.
Okay.
Your average Medicare supplemental plan will be, first of all, you have to pay for Part B, which this year is $121. Then your average F plan, say, would be somewhere between $150 and $175. And then the drug plans start at $16.80 and go up from there.
What's the F plan cover?
The F plan covers everything. There'll be not $1 that you pay out of your pocket if you take the F plan, as long as you go to a Medicare provider. Medicare accepts the services that they're rendering you, no money out of your pocket.
Now, is the F plan the one that you got to be careful about?
Nope, the F plan is the perfect one. You can use that in every state in the country. There's no loopholes. There's no hidden fees.
It's too bad that the best plan gets an F.
That is true. That is true.
So every grade I got, if it was an A, it was good. If an F, it was bad. But in this case, F is good.
F is good. For Medicare supplemental plans, F is good.
Okay.
Randy, we've run out of time, but before we wrap up, let me ask you, is there one particular source of information that you can share with our audience if they want to learn more?
Go on to Medicare.gov, onto their website. It has become a lot better, user-friendly. There's all kinds of information in there. You can just kind of put in your question and information will pop up, and that should help you.
Good. Okay, Medicare.gov.
Medicare.gov.
Okay. Thank you. That's been very informative, and we didn't even get to Social Security, which I was hoping to, but time went by. Thank you for listening, and hopefully you picked up on a few things that we talked about this evening. Next week's guest is Judy Green of Your Financial Analyst, and tune in then to learn what she has to say, and in the meantime, remember, your money matters.